All right, so I think I'll start and I'll open us off. I don't know if this will make the cut or not, but this is Dave Riley. He is the newest member of Arcwood Financial. He's going to be heading up our wealth management division. For a long time, we have been servicing like participants and 401ks and things of that nature, but we haven't actually been doing the, I guess, individual services, right? So that's where, like, if somebody needed help with an IRA or having a brokerage account or insurance or any kind of full comprehensive planning other than just the advice we give them as a 401k participant. So I've known Dave for a long time. We've really been looking to grow this division or add it. And so we now have David Riley, and he's head of wealth management, and we are offering investment services to individuals. So as part of that, I thought I guess we should do a video on, like, what is that, right? What is financial planning, or what is wealth management? So is that too high of a concept? And then maybe we'll break down into, like, subtopics on, like, well, what's short-term versus long-term? Talk to us about legacy planning, things of that nature. What should I be doing for safety versus growth? But at the high level, let's start, like what do you do?
It's a great question, Brandon. First, it's great to be at Arcwood now. To be able to build something from the ground up holistically that'll be able to help folks accomplish their retirement goals and reach the milestones that they want to reach, and hopefully ahead of time and on track to live happy, long, retired lives. I start with retirement planning and why is it appropriate, or why might it be useful, and it all comes down to just making sure someone has a plan. If you don't have a plan, then you're just kind of guessing, and it might be too late by the time you decide, hey, I need to have someone help me with this, or I really need to sit down and have a plan to make retirement. If it's at the end of this year, you could be pleasantly surprised, or you could really have some eye-opening decisions to make. Do I have to work longer? Do I have to move somewhere so I can afford to retire? Those are questions that folks don't want to find the answer to, if they can't do the things that they want to do. So ideally, that's what I'm helping folks do, is to put a plan in place, and we've got a breadth of services that we'll be expanding and offering that allow folks to have a comprehensive, holistic plan so that there are no surprises other than some of the things that we can't control in life.
Okay, yeah, that sounds good. And I think from where I sit, so I'm a recovering financial planner. You are still an acting financial planner, right? And I think from where I sit is we kind of do some of the same things, like the way we help participants and the way you help individuals, but where, what we can do is only from, real high up, some general advice like, hey, you need to increase your savings rate, right? Or you need to increase the age you retire, or maybe look at their investment allocations a little bit different. Working with you, right, it's more having somebody not just to give you that initial advice and tell you once, but actually work with them throughout that whole path, right, that entire journey.
Yeah. It's, for an analogy, it's, you'll have your general practitioner doctor, your family medicine you might go to for your regular checkups. But, what I help folks do is really get that initial deep dive. Let's get an MRI. Let's see head to toe what's going on inside. If there's anything that could be surprising that comes up, that could be an issue down the line. If you know this, if you arm yourself with information and you can craft a plan around, hey, here are some potential pitfalls or things that might come up, you can avoid them in the future. You can drive around. Let's take a detour and find a route to retirement that will get us there safely.
I don't know. I think this is appropriate because it came up this morning. So let's talk about alpha or value versus cost, right? So you and I just tried to help a person, right?
Right.
They needed a full plan, and from our perspective, they needed an advisor, but they said, no, thank you. We'd rather just do this on our own. Mm-hmm. And we gave them a lot of good free advice, but I mean, I guess the question is, well, what's the value there? Are they going to be able to do that on their own and have success, or how would they have more success actually having a financial advisor involved in their journey?
Now, their plan, it could be fine, right? But it's one of those things that could fall either way. There were a lot of potential pitfalls in the plan that we pointed out. Maybe they're confident that they can manage those on their own, and that's fine. And that's what I tell folks coming in the door is, this might not be for you. Not everyone needs an advisor. Some people are savvy with money and they get investing. They know how to do it. Maybe they were educated in school, or they learned it from a family member when they were young. But we find more and more that less and less people learn these skills in their family growing up. So I meet with a lot of folks that have no idea. So, if it's not for you, that's fine. If you just want an expert second opinion, I'm all about giving the second opinion. If someone wants to try me on for size and just see, hey, could it be a big fit? It's also not an all or nothing, decision where we don't need everything to work together. We just need something. And, what can we do to plan and have a relationship that makes sure that you do stay on track?
One thing I always think about it with is, I get people can definitely go out and buy their index funds and not need an advisor that does active management, and hopefully they can use one of our calculators or take the one free meeting they get with us and establish their savings techniques. But I always go back to that whole Susie Orman, right, where she tells everyone to buy term insurance and invest the difference as opposed to a whole life policy or universal life, which sure, but the problem is nobody ever does that, right? If you sit with us once and we give you advice and you actually did that, that'd be fine. But you never see, it's just so much information. The problem is nobody actually does it.
Yeah, unfortunately, it's one of those things that you might decide too late. Not health insurance, but life insurance is something that, especially when you're young, you feel invincible. You don't think what might happen to me. And if you're in your 20s, you don't have a family, maybe it really doesn't mean much to you. But if you have people that you care about and you want to leave a legacy so that they're taken care of, whether it's young children or to pay off a mortgage, to make sure that there's no cumbersome burden if you lose an income, or maybe in some cases the only income, it's appropriate to explore whether or not that's the right thing for you. I do think term insurance has a place with most young people. Mm-hmm. And the great thing about it is, you get to decide how long you want to keep it. If you buy a 20-year term policy, then, if you go 10 years and you win the lottery, you decide you don't need this term insurance anymore, you can drop it. That's well within reason. So it's a little bit more customizable than people think. And then when you blend it with the idea of whole life policy, or what I like to use is index universal life, there's kind of a multifaceted reason for doing that. That would be more potential tax-free income if the policy is structured properly in future. You can also have that be, where you get an acceleration of the death benefit for some type of a modified long-term care insurance. It's not long-term care insurance, but it could be used for that purpose to accelerate the death benefit. And again, that's something that's not for everyone, because those can be more expensive. And when I talk about that stuff, it's really its own deep dive to say, hey, this is a tool that we have in our toolbox. Does it make sense for your plan here? Sometimes it doesn't make sense, and I'd say actually a lot of times it doesn't make sense, but in some cases it does. Yeah. So it's really customizing the plan for each person I sit with.
And like you said, so we're talking about insurance now, and I think that's great, because the world of insurance, and especially brokers versus financial advisors or certified financial advisors, or even fiduciaries like ourselves, right? It's just so wrought with bad product and being positioned wrong for needs. Right, when I started in the industry, they had us out there trying to talk to people about doing variable products instead of their 401k, or instead of Roth IRA, right? This super Roth idea. And maybe that works for really high net worth folks, but for most people, they have access to those tools without the added cost of the death benefit, right?
Right. Yeah, it's I find in the industry, and you'll find this in any industry, right? When you have a set of professionals, some might have more integrity than others.
Yeah.
And for me, that's always been really big, is to ensure that, if I have access to the world of investments or insurance tools, estate planning, tax advice by using properly accredited CPAs. We can customize this plan using the right tools. But in some cases, you might find someone that is limited, where the shop or firm that they're with says you can only offer this.
Yeah.
And they might still be putting your best interest at heart within the realm of what they can offer.
Yeah.
But that might not always be what's right for you, or even the best, what is really in your best interest. It's just best for what they can offer. So, that's something that will differentiate us, is we'll have the world of options to be able to go to and say, hey, let's pick the right tools. And then, there's certainly the bad actors who are just out to make money for themselves and
or less experienced, yeah, or limits due to the firm they operate out of. Unlike us, we're fully independent, right? No proprietary stuff, which is going to make things, I think, easier for us and our clients. Well, let's talk less about product, Dave, and let's just talk about I guess I'd say the quadrants of financial planning. So we have retirement planning, we have legacy planning, risk planning, unless I already said that, right? But one big one is the differences between short-term savings or short-term goals and long-term goals. I think that's a big area a lot of people don't understand. Can you help us with that in under 60 seconds?
Yeah, absolutely. So short-term planning, I quantify as anything within the next 2 years. If you have an expense, whether it's, you're going to replace your roof, you need to buy a car, you've got appliances that need to go, then, we want that money in cash or a cash equivalent, something that won't be volatile with the markets and go up and down real quickly. Because if you have something that you really need, you don't want to have to then wait another 6 months, especially if it's something like a roof, because then you might have a leak. There could be other adverse things that come about from that. Long term is, anything 2 years or beyond. There will be different risk tolerances, whether it's 2 to 5 years or 5 to 10 or 10 and beyond. And then working with the clients to figure out, what helps them sleep at night. Because, if you're losing sleep and that's affecting the rest of your life because it's stressing you out, then maybe that means you're too aggressive, and we can dial that in with respects to the long-term investments.
Yeah, and we see it on the other side too. Looking at investors who their time horizon or their investment is retirement, right? Normally for us, and we see that they're in 80% cash or 80% bonds, right? That's not the correct asset allocation for a long-term strategy.
Right.
Maybe because they don't have an advisor, that's the only thing they can do to lower risk so they can sleep at night. But really, we need to find ways to get more yield or performance so our assets are actually growing for us for those longer-term goals, right?
Yes, absolutely. Now, there are certain tools that can be used that offer more security than others. Mm-hmm. Something like the stock market is pure risk. We know things are going to go up and down, and it's very few and far between that we find the market just trends sideways for an extended period of time. So for those that have less risk appetite and don't want to stomach that type of volatility, there are insurance products that can offer growth that outpace inflation. But your trade-off is typically liquidity and access to those funds. If you need something, we need to make sure that there are emergency funds set aside and other liquid funds just in case you need something out of pocket.
Yeah, I think it's further with understanding risk. And again, some people can do this themselves, but I feel like there's just so much misinformation out there. It's not just a managing risk between, let's say, bonds and stocks anymore, right? There's so many different asset classes within these things that you need to understand and work with somebody to match your portfolio to your risk, right? There's different types of stock mutual funds. You can go into blue chips to maybe bring down your risk profile but still participate in a little bit of alpha. There's different types of fixed income. Right now, I'm sure people are wondering, why am I owning bonds when I can go to my bank and get 4.1-ish. So those are all things people need to be considering in managing this whole idea of like short risk versus, or short-term goals versus long-term goals, right?
Yeah. So I personally like to take the time to explain that if someone wants to learn about it.
Yeah.
But I know not everyone cares. They just want to know, is my money safe? Or, if it's at risk, what type of risk can I expect? And as long as I set their expectations properly, generally that's good enough. But I'm a knowledge junkie. I love knowing things. So if anyone ever asks me, well, what's the difference between a tech stock and something like Procter and Gamble? Why do they behave differently? That's something that I can explain to them. But is that really important to their long-term goal? Maybe not. So it's framing things so that people are informed. They can make good decisions on their own, or I can help them make good decisions, and helping them feel confident in the decisions that they make.
There's so many ideas you just brought up there that I think are important, but I think it really comes back to this idea of like working with an advisor versus doing it yourself. Because a lot of times we see people lack of diversification, right? If people are doing it themselves, they have portfolios and they have, I'm doing just fine. And you look at their portfolio and it's 80% Tesla, right? Or the inverse, the people we talk to, 80% cash, right? Just sitting in the money market and it hasn't been growing for them because they're concerned, right? But I think that's another one of the values of working with a financial advisor, so they can create that portfolio that matches your risk and isn't centralized in one position or two positions, and doing it yourself. My other thought, and I wanted to go back, I think this is where I actually was being a financial advisor, or being where we are, right? Helping participants and individuals, but where our limit was all I could do was just try to educate people, right? And it's probably a lot. It's probably too much. I'm firing things at them like it's a fire hose. I'm like, well, you got to look at your risk, but you also can't just be in bonds. You can't be in this and this and this. And also look and then start talking about Social Security strategies and all of that. And I think it's, even though I wish we could just give people free advice who don't want long-term help, it's so much. And I don't know what my question is there, but I think he kind of brought it up. Like, you can only give somebody so much information. A lot of things you have to hand off and have somebody do for you, right?
Yeah, absolutely. I mean, I wouldn't say that I'm a master of none, but definitely a jack of all trades, and I specialize in a couple certain areas where I know lots of stuff and would be considered an expert. But when it comes to things like tax planning, for example, that is something that I know enough to be dangerous, but I don't provide tax advice. I don't prepare taxes. I'm going to go to the professional who does that. I can help someone help orient their plan and their portfolio so that it is more tax efficient going forward, absolutely, or implement some strategies that might help save them in the future. But that's always usually in tandem with their tax preparer or CPA. But on the investment side, I know plenty about large cap stocks, but there's a lot of large cap stocks. I don't know everything about individual companies. Yeah. So when it comes down to constructing a portfolio, I'm using a team of professionals that have their CFA, that are chartered market technicians, that they can go in and actually figure out how should we customize these strategies so that we're not finding the next big company that goes end over end, unfortunately. That still might happen, but we can lower the risk. And then, we look at small cap stocks. There's tons of smaller companies that no one's ever heard of, but we can invest in them. And which one of those might make the right, be the right decision. And if we really just want to do the spaghetti approach, we can include some indexes as well. Just make sure we get a little bit of everything, just depending on what type of, whether it's large cap or small cap growth, value, international stocks, and there's all those same categories within international as well. And then you mentioned bonds earlier. A lot of folks don't realize there might be a universe of 10,000 stocks out there, but there's probably a million or more individual bonds or bond holdings, CDs, things that are, cash instruments that can accompany these types of bond funds or investments. And I know I don't know much of anything about how to find and quantify the risk in those, so we use a team of professionals to do that.
Yeah, I think the active approach, even within mutual funds, I know we're going to use a lot of third-party money managers for the people that are working with you for the fixed income portfolio, but I definitely believe in active management for fixed income. Some asset classes on the stock side, on the equity side, sure, you could buy an index, right, for the long term, especially if you're saving enough, buy a whole Vanguard total market or something like that. But once you start managing risk in your portfolio and you have to bring in fixed income, I think you have to have an active strategy.
It's easier when you're young because you've got time. But as you get closer to being in retirement, and I generally quantify that anyone 50 and older, 50 to 65 or beyond if you're still working, if you know what you're doing, great. And if you're confident in that, that's great as well. I'm all for that. I wish more people knew more about this so that, they did more active saving and better investing while they were younger. But the reality is they don't. And that's why we exist in our capacities and what we do. If we can point people in the right direction and give them the ammunition, give them an element of control over their destiny, that's what makes people happy, and that's what I like doing. I love helping folks, accomplish their goals. I get postcards, maybe once or twice if I got a postcard, but I get pictures of family vacations where they take their grandkids on, to Disneyland or on cruises, and that's rewarding to me to see, hey, they accomplished when they're accomplishing what they want to do in retirement because I helped them on that path.
That's neat. That's awesome. Let's pivot into a different section. Let's talk a little bit about legacy planning, and just what that is maybe an overall concept, but also let's tease what are some of the neat, maybe not products, but maybe registration types that a lot of people don't look at until they talk to somebody like you that come up. Like maybe the CRUTs and things of that nature, or converting to Roth. I don't know. Give me something interesting that a lot of people aren't looking at when they're thinking about legacy planning that maybe you bring to the table.
Right. I think the most well-known is the Roth conversion right now. Because advisors and internet talking heads or podcasters have been talking about doing Roth conversions while the Trump tax plan was in place. And now it seems like we might be in a position where the Trump plan gets extended. Because currently the plan is set to expire in 2026. Tax rates are going to go up for tax year 2026. But if the Trump plan gets extended, that's just going to extend the window to continue doing Roth conversions at these lower tax rates, because they don't own enough of Congress to make them permanent cuts. It would be another 8-year extension most likely. That's something that a lot of folks missed that window. And, I've had a lot of people come to me say, no one told me to do this, and it's been the last 2 years. And it's like, well, this was an 8-year window where we had opportunity to make these conversions. So if that gets extended, that'll be a great opportunity for younger folks that might have had funds locked up in their 401ks before internal plan conversions were really possible. Nowadays, that's becoming a little bit more prevalent, but still some plans might not allow it. But for myself, that's what I really structure my approach to, is what can we do to pay taxes up front at a lower rate to get it out of these tax deferred accounts so we get tax-free growth in the future. And
going to the beneficiaries.
Yeah, and that's, as far as estate planning goes, really powerful, because if a beneficiary can get money tax-free, and under current law you can leave the funds in that Roth IRA for up to 10 years, and this is where some of those special acronyms you were mentioning come into play.
Okay.
But that's 10 years of tax-free growth, and then you might have to take the funds out. Whereas if it's a traditional or regular IRA, your beneficiaries have to pay whatever income tax what bracket they're in. And if they're in their working years, it could be at a much higher rate than you were in retirement, leaving those funds. you would have been better taking that out sooner as opposed to later. And then, this is where some of the advanced planning comes into play. And unfortunately, you do need to have a little bit more wealth saved in these types of accounts.
Yep.
And it could apply to a traditional IRA or a Roth IRA, but that's where you use the CRUT, it's the charitable remainder unitary trust,
yep.
where it allows you to, I think it's 10 years or 20 years. It gives you 10 extra years,
okay.
where you can extend the length of leaving these funds in a Roth IRA to grow tax-free. And it can be real powerful. We partner with some local attorneys for estate planning to get that set up properly. I'd say if you have about $1 million in your plan, and upwards of $3 million is kind of ideal. Anything over that is even better. But there's that's kind of the value that you would need in those accounts to make that type of strategy work.
Yeah, I think those are good points. I summarize people a lot, or I repeat them, but I do think if we have the extension of the current tax system and we pick up another 8 years here, we should see more people looking at Roth conversions, because the problem, just like you said, is people trying to do it now, it is too late, because it's not prudent to do a Roth conversion in 1 year, because you'll just crank your effective tax rate so much. The idea is to do it over a longer period of time. And if we just picked up 8 years, we can do the calculations, or you can do the calculations. I'm going to keep working on the 401ks if that's okay.
And if you're in an ultra high tax bracket already and you expect to stay in one, maybe the Roth conversions are something that you can still hit heavy in these last couple of years if for some reason the plan doesn't, the Trump tax plan doesn't get extended. Because it's not written in stone yet. We don't want to count our chickens before they hatch.
Yeah.
Who knows what will happen in Congress?
All right, so we covered short-term, long-term. We talked about legacy planning. Do we want to talk about retirement planning a little bit? You and I just had a situation where we were talking to a client about maximizing their retirement income, and we talked a lot about Social Security strategies, right? Mm-hmm. So is that something that comes up a lot in your planning?
Absolutely. I mean, there's a multitude of questions. The primary one that I get is just how should we file?
Yeah.
And the reality is there's over 100,000 different ways for a married couple to actually file for Social Security and do their claiming strategy. So I help folks figure out how can we maximize getting the most out of Social Security. And that's something that, no one is taught, because it's just kind of in the government system and no one knows the rules unless you go onto the Social Security website. I use a software that helps me figure out what is most appropriate based on someone's age or life expectancy. Mm-hmm. But even then, that's just kind of a blank, hey, if you think you're going to live this long, this is what you need to do to get the most out of Social Security. The reality is, average life expectancies or even extended life expectancies don't always paint the right picture. Maybe there's an age difference between the spouses, or we have one high earner or someone who's didn't earn that much. There are spousal strategies, claiming strategies that can be used. Someone might file early at 62, and then someone might delay until age 70. Yeah. But we need to make sure it's the right person doing that. So there's a bunch of different ways. You just need to work with someone who's qualified to help you make the right decision. And the good news is, for most people, I get that question years in advance because they've been hearing about it for a long time. So we have time to say, hey, here's what I think is likely to be the best strategy. But we'll wait and see, because if your needs change or if the law changes and how these are getting paid out, they shift the full retirement age generally every 20 years. It's now age 67. It started at age 65. Mm-hmm. Probably by the time we're old enough to claim, it might shift up to 68, if not further. So that's something we need to keep in mind as well. And the other big question I get on Social Security is, will it still be there?
Yeah.
I tend to be a little bit more optimistic. I believe wholeheartedly that Social Security will be there. It might not look the same for you and I, as 2034 is the latest report, or maybe 2035 is the latest report when the current trust fund runs dry. But there are still enough working age population individuals putting into the system that will support 78% of the benefit that's currently estimated or promised to you. So while you might get a haircut, it'll still be there. I actually think the government will do something to extend it, because if someone gets a 22% haircut on their income, it's going to be rough. Just about 50% of Americans in retirement get nearly 90% of their income solely from Social Security, and that's a huge amount. So, we want to talk about some wild things that could happen. You have some real angry folks real fast if their benefits get cut, and that's all they're living on.
Well, I think that's the importance, again, of I respect what you do because I used to do it, but also, we launched it as a division. But I think getting help with Social Security planning at any age is so important. Just if you can control what your own taxable income is, you got to look at, right, should you be taking W-2 versus a K-1? And you're paying less FICA FUTA taxes, but you're limiting your Social Security. That's not something your CPA is going to talk to you about, right? That's something you need to talk to a financial planner about. If you're 10 years out from retirement, you need to be addressing that again and looking at what the strategies will be at. And again, the 2 years before, 1 year before, Social Security, even if you're in a high tax bracket or income bracket, is going to be such a major part of your retirement income. Just leaving that part alone or not having a plan is not efficient, not prudent, right? All right. Well, thank you, David, and thank you for joining Arcwood. And I look forward to working with you and seeing how you can help people, and hopefully I can help a little bit here and there. For anyone watching this today, I think this is the right time to be talking with a financial advisor, right? This year, all the potential changes with taxes, but also just the interest rate environment we're in the volatility of the market, this isn't something to put off. Right now is the time to come up with a plan, because maybe you can lock in some high interest rate products, or maybe it's time to not dispose of your bonds. There's a lot of things going on, I guess, is my point. And I think if you've been thinking about working with somebody, it's worth a call, 1 hour meeting with David. And so how do we get a hold of you?
Yeah, my information's available at arcwood.com.
Okay.
And, I can be reached at dave.riley@arcwood.com. It's really, if you get me via email, you can respond. I'll have a calendar tool available where you can actually have access to my schedule. And, I really want to encourage folks to take advantage of it, because the reviews are complimentary. Mm-hmm. It's something that, again, if you haven't done, is worth it, even just to sit down and have an initial plan created for you so you have a basic roadmap going forward. And, we're running on the holidays right here. A lot of folks say, I'm too busy. I'd say, now is the best time, because you are busy and your mind's running, you're active. You wait until New Year, that's the letdown period.
Yeah.
Everything is running high right now. You're focused. And if you squeeze this in, it'll be worth it, and you'll have a game plan running into the new year, instead of sitting there, I'm exhausted from the holidays, I don't want to do anything, and people kick the can down the road, and that's how you end up with, problems.
Yep. Awesome. Well, thanks again, David. Thank you, everyone, for joining us, and we'll talk to you soon.